The first important thing you need to see here is the word cash. Now, we tend to confuse profit with cash. Profit is not cash. If you think profit, think of the income statement. If you think of the income statement, the thing right at the top of the income statement is sales. And sales consist of cash and credit. Can you see already? It's not just cash. You see? So, I want you to make a differentiation in your head between the word receipt and income, payments and expenses. There's a difference. Income and expenses can have a accrued and a prepaid in it. Let me give you an example. If I say to you, your rent expense is 1,000 rand per month. You paid 1 month in advance, prepaid expense. So, what is my expense for the year? What will my expense for the year be? 12,000. What will be my payment? What did I actually pay? 13. Can you see? Let me just. Okay. So, income and the expense is nominal section in the first place, right? And in the second place is what I'm supposed to receive the year and what I'm supposed to pay for the year. Okay. Receipts and payments is the cash going in and out of my bank. So what am I saying? Immediately, think of an expense that doesn't influence bank. Quickly, think of an expense. Think of your nominal section. What's the first adjustment I taught you? Depreciation. Do I go to the bank and they pay me depreciation? No. So can you see, depreciation is an expense, but it's not a payment. Does that make sense? Who can name me other ones? That's an expense but not a payment. Trading stock deficit. It's an expense but not a payment. Another one. Loss with the sale of an asset. It's an expense. It's not. So in other words, if I gave you, let's quickly think, if I gave you an asset disposal, I say asset disposal, and I say here this was vehicles 100, accumulated depreciation 70, bank 50, and then I made a profit of 20. Which one there's the income or expense? Yes? No. Income is your nominal. What is nominal here? The profit. So this would be my income. What will be my receipt? What did I receive? What did I put in my? This would be my receipt. You see? So, what did my bank actually increase with? With 50 rand. But the 50 rand isn't my profit. Only 20 rand is a profit. Can you see the difference? You're starting to see that. Okay. So, that's the first thing you need to identify. When I talk income and expenses, I go exclusively nominal. And this current financial year. Okay? When I go receipts and payments, I go cash. So in other words, things that I will put in the CRJ and the CPJ. Can you see now I cross lines because there can also be balance sheet. Let me quickly give you an example. I pay my creditors. Is that an expense, payment, or both? I pay creditors. No, let's do this. I pay creditors. What is my two accounts if I had to do the AOL? Bank and creditors control. Do you see any expense there? No, because this is a liability and this is an asset. So is this an expense or a payment? This is a payment. I pay wages. Expense, payment, both. Both. Because wages, bank. Wages is an expense. Bank is a payment. Can you see the bank is what makes the cash? So if I had said here, buy stationery, ne? I would say, okay, stationery, if I buy it cash, can you see it's going to be an expense and a payment? But if I buy it on credit, it will only be an expense because bank makes it cash. Does that make sense? So now we're going to do two types of budgets. The one that we're going to do 90% of the work is called a cash budget. So cash being money. Can you see all the money I spent in this year? Ne? Doesn't matter if it's debt for last year or debt for next year. But I spend it this year. What is a budget? A budget is I'm planning. Has a budget happened? No, it didn't happen yet. Okay? So you're going to see, I'm going to use two words. I'm going to use the word actual and budgeted. Ne? Actual already happened. Ne? So it's done. It's history. Budget, still going to. So that's a dream. So actual is your history. Budget is your dream. Does that make sense? Yes. Okay, let me. So your standard question says always, what is a cash budget? So the moment you see the word cash, ne? You're going to use the word receipts and payments. And the moment you see the word budget, you're going to say future. Budget goes with future. Cash goes with receipts and payments. And we talk about surpluses and deficits. In other words, if I receive more money than I spend, I have a surplus funds. If I spend more money than I received, I have a deficit. Okay? Sharp. Everybody fine still? It's important that you know this terminology. Okay? Now, that's the first thing. They're going to ask you, why are you setting up a budget? Then you say it's to show future cash, receipts and payments. Or you can say to show future cash, surpluses or deficits. You need to plan. Okay. Why is it important? Now they say here the cash budget is an essential tool used to plan and monitor liquidity. So this is also a definition. Okay. So what is liquidity again? No, liquidity is
Cash flow.
it's cash flow. Just write it for you. Cash flow. Do they have enough cash flow? And if I have to think about, yes, profit is very important, but I think for the running of your business, cash is more important. Because you can't run a business if you can't pay your workers, if you can't pay your phone, if you can't pay your electricity, your rent, how are you going to run the business? So cash flow or liquidity is extremely important. Okay. Now you can read through all the other stuff. Now, if I look at a cash budget, it's basically going to have 3 sections. It's going to have a section for the receipts, then a section where we plan for payments. Then we're going to get the difference between the two, which is going to be the cash surplus or shortfall. Okay? So you're literally going to say the receipts less the payments. Okay? And then I'm going to look. So this is just for the current month.
This is a monthly budget.
It's a monthly thing. You budget per month. Okay? It's a monthly thing. So you're going to use that month's receipts and payments, get a shortfall or surplus. Another word for shortfall is a deficit. Then I'm going to add my opening bank balance. Now, you're going to add if it's positive, and you're going to minus if it's negative. When is it negative? When it's a what? When it's an overdraft, right? And then you get your closing balance. So this is the format of your cash budget. Okay. Now, the 2 most important things in a business is your stock. Because your stock is the thing that makes you money. Okay, so what's the 2 most important things? It's your sales and the buying of your stock. So if I look at sales, can you see I have cash sales and credit sales? So write for yourself. Your total sales is equal to the cash sales and the credit sales. Okay? Now, if I say to you, your cash sales for January was 20,000 Rand. When did you receive the 20,000? Which month? No, you received it immediately. What is a cash sale? I sell this, you give me money. Can you see? Cash sales is immediately. So it's the same month. Credit sales, however, isn't. But what is credit sales? Buy now,
And
pay later. But pay later is most cash. Okay? So I need to plan for when I'm getting the cash in. Okay? So I'm going to set up a schedule, which I'm going to teach you. Okay? So in other words, if I have sales in January, né? I will get the cash in January. But the cash for the credit sales, I can receive parts of it in January, parts of it in February, parts of it in March. Okay? And the same goes with purchases. Now, in a budget, when we talk purchases, it's only trading stock. Okay? So in other words, if I buy a vehicle, I'm going to show vehicles. Okay? But if I buy trading stock, I'm going to say it's purchases. Okay? And the thing is with purchases, is they always assume that we keep a constant stock level. What does that mean?
You buy the same amount.
It means if I sell this remote, I'm going to replace it immediately. Ne? Do you think if you go to the tuck shop, if they sell chocolates, they're going to wait till the chocolates is all done and then they're going to put new chocolates out. No, they replace it. You never go to Checkers and it's the end of the month and then the aisles are all half empty. Ne? It's always abundantly full because they keep a constant stock level. And what that means for us who's doing the books is that your purchases is equal to your cost of sales. What is cost of sales? The cost of the stock that I sold. So the cost of the stock that I sold and now replace purchase. You see? Okay. And now your cash purchases, your purchases works the same as your sales. The total is equal to the cash and the credit. The cash I pay immediately. Ne? The credit I pay later. Okay. So in other words, I buy it this month. What is this month? July. Maybe I've got an agreement to pay it in 60 days, which means I will only pay it in September. You guys get it? And now in the cash budget, I need to keep track of that because I need to see, is my business liquid? Do I have enough cash to pay all my expenses, or must, can I do something big with my money this month, or must I rather wait for next month? You see? Okay. So now, we're going to start here. This is a basic cash budget. Now, can you see this cash budget? Starts like this. It looks like this. Can you see it's for July, August, September? It's for 3 months. So the norm is you don't really want to budget for more than 6 months, né? Because things change. And can you see they've got here my receipts, my payments, and then here I'll have my surplus deficit. Cash surplus deficit, bank opening, bank closing. Can you see we work here only with the bank? Okay. Now, if it's opening, it's always, the opening would literally be the 1st of July. You see that? When would the closing be?
The 30th of September.
The 30th of September. Can you see? That's my budget period. Okay. Now, if I look at the budget itself, the information, can you see what they do? They split it in actual and budgeted. Actual is my history, it already happened. Budgeted is my dream, this is what I am planning. But the information I'm going to use the same way. Okay, so now let's see. The first thing they want, can you see they give me here cash sales, credit sales, wages, rent, cash purchases, credit purchases, other expenses. So they say, a new computer will be bought in August, and additional info, they say Malebu has a favorable bank, debtors pay their accounts in 30 days, after 30 days, can you see? After 30 days, meaning not in this month, but next month. Creditors are paid in full 2 months after. Okay, so now let's start working. Cash sales. When do I receive cash? In the same month. So I look for July. What is July's cash sales? 34. What is August cash sales? And September? Now can you see, that's quite straightforward. Now on that same principle, you can do the cash purchases. Quickly put in for me the cash purchases. Is that what you got?
Yes.
Okay, so that's straightforward. Next thing, credit sales. So credit sales, I'm going to use debtors. So they say there, debtors pay 30 days after. So, whose money am I going to receive in July? Which month's money? June. So I take June. Can you see? Does that make sense? In other words, the people who bought from me in June on credit, I will receive their money in July. I expect to receive all of it. I'm budgeting for it. Remember, this is my dream, ne? What is my dream? What am I going to receive in August? 28. What will I receive in September? Does that make sense? Okay, so let's go again. The people who bought in July cash, I receive in July. But the people who bought in July on credit, I only plan to get it August. Because they say debtors pay 30 days after they bought. Does that make sense? Is everybody with me? Okay, let's do payments to creditors.
Is that the format?
Yeah, this is the format. You learn it off by heart. So now the payment to creditors. Here's my credit purchases. Which month's money will I, or purchases, will I pay in July?
May.
May, because why? They say here, creditors pay 2 months after I buy. You see? So if I bought in July, it means I'm going to pay it in September. You see? You guys get it? So, whose money is going to be paid in July? May. Does that make sense? I bought it in May. I pay it 2 months later. So my payment is going to be 20. Can you do August and September? So, August would be what I bought in June. 1, 2, June. September would be what I bought in July. Okay. So, wages. They didn't give me any information about wages, so I assume wages is in the month, which makes sense. You're not going to pay wages 2 months after the guy worked for you. So, wages is a payment, and I pay them 10, 11, 11. What can you see happened between July and August? There's an increase. Now, if I were to ask you, what is the wage increase? What is the wage increase?
10%.
Let's see how we work it out. So I call this, and this is the type of questions they ask. So I call this the man in the hat. Now we all know that the triangle is the universal sign for change over the original. Can you see it looks like a man wearing a hat? Times 100. So what's the change? 11 less 10? 1,000. What's the original? The 10. Times 100 gives me 10% increase. Do you think that 10% increase is a good increase?
It's not bad.
How can you say that? With what do you compare it? What they usually do is for wages and for salaries. They go look, if it's a good increase, they go look what's inflation.
Oh.
And they take inflation plus 1. So inflation at this stage is 4%. Plus 1 means inflation is 5%. They're getting double inflation.
Oh, that's...
So this is literally a really good salary or wage increase. You see that? Does it make sense?
Yes.
Because what they are saying, how does inflation work? Inflation is the percentage you pay more for what you bought last year this day. So if I go and I buy a basket of groceries and I pay 100 rand, and next year I buy at the same time exactly the same products, and now it's 110 rand, then the inflation is that 10 rand, 10%. Okay, so now they say, okay, let's give them inflation so they can keep their living standards the same. But if I give them 1% more, they are actually improving the living standard. Okay. Okay, so let's go. But now, let's go. Next one is rent income. So rent income, at this stage they didn't give me info, so I assume I'm receiving it in the same month. So can you see also there is a increase. What's the increase here? Is also 10% if you work it out. So this would be 500 divided 5,000. Okay. Next one. We've done those. Other expenses is a payment. And they didn't say when, so we assume it's in the month.
It does at the bottom.
What? Oh, it's paid in the month it occurs. Okay. I'm so glad other people are reading. Don't be like your teacher. Learn from my mistakes. You're going to learn much more than from the stuff I do right. Okay. Now we still just need to do Malebo Traders. A new computer was bought the 1st of August. Okay. So I buy a computer. You can write equipment. You can write computer. It doesn't matter. Where will I put the 6,000?
In August.
In August. Even though it's the, if it's the 1st of August or the 31st of August, it's still August. Okay. Don't go the route of, oh, we need to plan to have money ready by the 1st of August. No. Okay. Don't go that route. So now, the next step is the calculator step. So you need to add everything. So let's total. So now we need to do, oh, my things are wrong.
What things?
I had to write here total receipts. And here I had to say, so everything has to move one down. So this is total payments. Then it's going to be cash surplus deficit, bank opening, bank closing. Okay. My word. If we were on a computer, I could just insert a line. Yes.
That's another reason why you should.
Okay, so let's just quickly go through. I took my receipt less my payment, I get my surplus. Receipt less payment gives me a deficit. Receipt less payment gives me a surplus. I put the opening balance of my bank, which is favorable, so it's a plus. I add, I get my closing balance. But now, very important, my closing balance is most my opening balance the next month. Ne? Can you see there? The closing is next month's opening. So I say 38 minus 1,5 gives me 36,5. So what will be my opening in September? 36,5. So 36,5 plus 6,5 gives me that right?
Exactly.
You guys.